Good morning. April 19th, we're getting to the end of the month. Farmers sure hope they can get some progress planting soon, but so far not much happening up here in the northern plains. July corn for the week was down 7 cents. July soybeans down 5 cents. July Chicago wheat down 8 and Minneapolis July down 9 cents. Not a great performance by the grains this week, although that is following some pretty decent weeks of performance where prices went up when the trade war was initiated. But for this week anyway, the grains were just moderately lower. Outside markets, though, June crude oil up $3 this week after some pretty significant losses. We can look at these charts shortly. On the opposite side, June gold was up $84. That was up 200 some dollars last week, so up $300 the past 2 weeks. The Dow down 1,070 points, and the dollar down almost another 1%, down 0.763. So you could see some things going on here. The outside market's still having a great influence. The dollar continuing to drop about 1% this week, down 11% since mid-January. The Dow continuing to drop, gold rallying, crude oil rallying, but the grains almost in neutral. We only had 4 trading days because of the Good Friday holiday, so kind of a shortened trading week. When we look at these charts, though, you look at the corn, this July corn for the past year, you can see how we've recovered a lot the last 2 weeks. Now down, 6, 7 cents this week. But this corn is probably the most bullish looking chart we have. Grains are being led higher by corn. We're almost near the highs of the year here in the corn market. So not a bad performance by corn at all. The other markets are not quite as convincing that the trend has turned. Now, soybeans a little stronger. We got higher highs here, and but we don't necessarily. If this is a low, maybe we have a higher low. But the market is kind of in neutral, trying to figure out whether we're going to turn trend higher or not. Like I said, corn is the most convincing. As far as weather, we have a very warm weather forecast in the 8 to 14 day, actually the next week as well in most of the corn belt. Of course, that would mean good planting progress normally. That means soils will warm and that's good. But look at the precip forecast. Wet for most of the corn belt. Now also wet for most of winter wheat belt. That might be what's holding the wheat markets back. And if you look at wheat, uh, wheat prices were a little lower this week, but we don't seem to have as strong a market. We're sitting here very close to the bottom in the Chicago July wheat, the bottom for the year, which we just made, and the market isn't going up a lot. Of course, that winter wheat conditions are probably improving a lot, and the outlook for the market is improving. This is the spring wheat July chart. Again, you've got some recent strength, but we certainly can't say that the wheat markets have turned higher, but of course, corn and soybeans look a lot stronger. You look at the outside markets, we're still getting a great amount of influence by these outside markets, maybe more so than even the weather this time of the year. We're in spring planting, that should be very important. But the outside market's still having a big influence. This is crude oil. You saw the big decline here, Saudi Arabia ramping up crude, and of course, Russia starting to maybe even possibly be pulled into the rest of the world if we could solve that Ukraine conflict. But Ukraine doesn't want to. They want to fight. They want to fight, fight, fight. At least they're, you could even call Zelensky a fraudulent leader, a fake leader. He's not elected anymore. His term expired. And he is a man standing in the way of peace. And it's ironic because his country is losing the war and they're losing the support of the West, which of course financially has supported them the entire time, giving them all the military goods that they need to even be able to defend themselves. So it's a very odd situation. But we haven't solved that conflict yet. But if they do, of course, Russian energy is going to start being used worldwide again. And that maybe is part of the reason of this decline, but also the Saudi Arabia announcement. Basically, they want to ramp up their production. So the other market that is going the opposite direction and maybe leading the charge is gold, soaring to new highs. again up 80 bucks this week, up 200 last week, obviously at 3,300. Progressive Ag said when we broke above the $2,100 area way back about a year ago, a little over a year ago maybe now, but we were basically at, what is that, 2,400. When we broke above 2,100, the old historic high, at the time I said, wow, gold is at a new high. Usually when gold goes up to new highs, it doubles in value. That's a $4,200 value. When we were trading 21, that looked like a pretty bold statement. But look at this. Since then, in less than a year, about a year, we've gone up to 33.28, 3,300. We're actually halfway, more than halfway to that $4,200 target. I think gold is going to get there. What is going on is the United States, the rest of the world, going to the gold standard instead of the US dollar. Look at the dollar. Look at what the dollar has done since January. We're at 110 and we have dropped 11% since January. Look at this decline. Dollar going from the highs for the year, to the lows for the year in 3 or 4 months. Wow. Wow. That might be the most bullish thing for commodities in the US, priced in US dollars. Actually, all commodities should be up 10% because of the decline in the dollar. And we haven't done that. The only thing that has is gold. But wow, you look at the potential for bull markets to develop. Some of our best prices came when the dollar was weakest, 2008, 2012, 2022. We get some of the best prices when the dollar is at its weakest level. And actually, the dollar is dropping very, very fast. The other thing, Dow futures, you can see the Dow kind of recovered quite a bit, from we've had recent declines. The Dow actually down another 1,000 points this week. We only had a 4-day trading week, but wow, the Dow is also suffering. So you're seeing a confluence of influence here in the markets, and wow, we've got a dollar that's in rapid decline. Normally, we are trading weather this time of year, but the wheat market should be at new lows basically on the recent rain and the rain forecast in winter wheat country. But there are outside influences that are pushing these markets, and the grains are finding some support from it. And actually, the weak dollar, that dollar continues to decline at the rate that it is recently. We could have a bull market in commodities develop. But of course, the first source of that is showing up in gold. We're seeing a huge strength in the gold market, but actually grain commodities going up with a trade war being initiated is very interesting indeed. And can we maintain that and rally? Well, a lot might depend on that dollar. Can we turn these grain trends around? Corn is kind of leading the way, and soybeans is participating. Wheat is a little more reluctant. Maybe that has a lot to do with the improving weather in winter wheat country. But this definitely is becoming very interesting to watch these markets, and the outside markets will have a lot to say about the direction of all grains and commodities in general as we go through the next 6 months or a year. But certainly these outside markets bear continued watching. Hope you have a great weekend and good marketing.